I didn't do a weekend video. We were busy out of town. Hockey. So we're going to revisit a lot of things. We have a lot of information to go through. If you're new here, go down to that bottom right-hand corner, hit the Options Center logo and subscribe. And if you like this information, if it helps you in any single way, like the video. And also feel free to place any comments if you have any questions, chart requests, anything to answer. I'm here to help. So that's why we do these videos each and every day. So don't forget to hit the notification buttons. Now that we've gone through all this, let's go through it. We have SPX on the monthly time frame. We're looking at primary wave 1, 2, 3, 4, and working on wave 5. If you're looking at this channel, it fits very well when it's a very big time frame, so you know you can adjust these lines and move them into different positions. But this one seems to work really well. Came up to the top of the channel, had a nice reversal off of it, and we retested here this month already. We're only halfway through the month, so we have plenty of time left to see what happens, but we have FOMC tomorrow, so that's going to be a factor in what happens next. Now, on the monthly time frame, sorry, it's my chihuahua. On the monthly time frame, we are bullish on all aspects. We don't have any divergence until you get to the RSI there, so that's the only hint of any bearish reversal here on the monthly chart. So let's move down to the weekly, see if we can find some more information out. All right, on the weekly, we're still above just about we're just holding on tight to that 8 EMA on the weekly. Let me pull back out just a little bit. We are on intermediate wave 1, 2, 3, and I'm bringing back into effect, you know, the bearish scenario. We're gonna kind of show that just a little bit more. That this would be intermediate wave 3, and we're doing an expanded flat, and we still are looking to the downside, but we'll have to see what happens this week. So this would be the end of wave 3. We have A, expanded B, and then a 5-wave move down to expanded C there. So that's what we're looking at with the divergences that we have going on, and the type of breadth. There's so many things, there's so many factors that lead me to think that we're back in this position. Now, once we got back over early in the week, over the weekend, once we got back over the 8 EMA and we had the huge move from Friday to Monday, you know, we want to show the bullish scenario just in case we held that 8 EMA. Let's go down. Speaking of, on the daily, trend is our friend. So we were pointing out, since we had that huge move on Friday to Monday, that we got back over the 20 and the 8 EMA. So we want to see what would happen if we held that, similar to this move, which would right here, which got back over those moving averages and just started riding that 8 EMA. So we don't want to fight against that again. I had a problem with this last time. So now that we fell back down below it, we just want to kind of bring back this bearish scenario. But what we have here is a megaphone in this turquoise outline, and everything's still playing out just as planned. We have a 3-wave move down. Now, some say that this is an impulsive 5-wave move up. I could see where that comes in, but we did have a small move here, which could signify an A, B, and then a massive wave C. But it did come right up to the 1.618 extension. And so that plays out very well to still be a 3-wave move down, 3-wave move up for expanded B. And now we're looking at, since we had a reversal off of this resistance here, a 1, 2, 3, 4, 5 down. Now I know I have the bullish count here as an impulsive wave 1 up. Let's take that out. And corrective wave 2. Let's take that out for now and go back to our scenario where this is a intermediate wave 3. We'll have to take these away. Intermediate wave 3, which would actually be, it doesn't matter where you put it. You can put it here, you can put it here. A, B, C, and so 4 would be down here. And so maybe we get past the 200-day moving average, make new lows. You have the bottom of the megaphone here, which could be overshot just like it does on the upside. We have the bottom of the channel here as well. So we have a lot of confluence and a rising pivot here, all in this section. So we'll see if we can actually get down to that point. I don't want to move too far ahead. We did have that gap down. We do have an island reversal on the E. Let's see, on the SPY, I believe we do. We'll check that out. We did hold the gap here for now, but leading into FOMC, then we're going to have to get some more information. So the choppiness into tomorrow. I was really surprised on the moves that we actually had before FOMC, but I think that's due to the data that came out for inflation and whatnot. So yeah, we're not going to go down to 65. We're going to explore some other daily charts here. Let's go to QQQ. This is something that we do different on our usual updates that we have. So QQQ is kind of the same thing. I already had this one mapped out. We have intermediate wave 3, where we came down, had a 3-wave move down for A to the bottom of the megaphone, 3-wave move up for B, and we're working our way back down. This actually, to me, looks like a 1-2, 1-2 setup, and we have our movement down. We're holding that 50-day moving average. It's a simple moving average, and also this trend line down from the Corona crash. And we still did not fill in the gap, so we'll see what happens tomorrow. See if we can start working our way up, or if the minutes come out around 2 o'clock and we start to descend. Now, this is the former all-time high where that 3 ended, that we're labeling 3. And we went to back test that along with the 50. So that's a very important area we see here. If we lose that area, then we're talking some movement to the downside should be imminent at that point. And I'll extend this rising pivot there. And then you have some confluence here. It's going to be good support, probably for a wave 4 bounce. If this is a 5-wave move down, probably get a nice little bounce here along with the gap. If we fill that gap, we have the rising pivot and 200-day moving average all there. So if we do, what's going to happen is if this is a 5-wave move down, then we're getting into wave 3, and this can be very impulsive. And we should be able to tell if we're chopping around, working our way down, then something else is happening. And I wouldn't suspect that this is an actual 5-wave move down at that point. So it should be very impulsive, big move from this area. After FOMC, it should be quite clear what's happening. Let's go to IWM. Now, IWM, I have all sorts of stuff going up there. We're going to take that off for now, because that does not apply. So we came up to this channel. We built the channel, came right down off of this. We had a nice move back to the bottom of the channel. We're breaking down from there, but we do have some big support here around the 211 area and a little bit below that as well. But this is a, if we had our wave 3 here and then had a W expanded X and down a wire, you can consider the ABC. I don't, it's all about new Elliott wave theory and old, but if you have what matters is W, X, Y. We're going lower at this point, what we're projecting. And if we lose this support here, that's what's going to happen. And we're looking for this around the 200 area, a little bit below, and there's even more of a bearish count if this was the end of wave 5. We had our 3, 4, and 5 in here. Then we are possibly going much lower to retest the 170 breakout area, where that would be consider a 1-2 setup at that point. And we'll leave it at that. We don't want to assume too much at this point. Let me take that out, clean this chart up a bit. And for you futures peeps, let's go to ES. Same thing. We have this intermediate wave 3, A, B. and then down to possible 382 retracement, which coincides right here with this rising pivot as well. So we have it works out perfect if we get down to this level, but we'll have to take this day at a time. The way we're biased to the downside now that we're underneath the 20 and the 8 EMA, and they're starting to curl to the downside. That's really what's going to start to skew our mind frame into what our positions are. We're hedged, 50 to 75% of the time, especially when we're holding positions overnight. So it's very important to whether we're underneath these the 20-day moving average or the 8 EMA. It's very important to where we actually sway our position size and which direction we're headed. So I do have some positions in Roku. We were in Baba. We were looking at what the heck was I in earlier today? I could look. I'm not going to look right now. That was on my Robinhood account, so not this one. But anyway, so we were looking for some upside on some small caps and mid caps, but while we're pretty heavy on the downside for tech. And so, it's all about your bias. What you want to do is you want to hedge with things that you think are going up, and your main position, like ES, and I'll show you on NQ why we're biased to the downside here as well. And so we're well underneath the 8 EMA. We're well underneath that 20-day moving average. But the caveat is when we get down here, we took a little bit of profit, and that's when we jumped into another Roku position. When we held this 786, it coincides with this. It's confluence with the all-time highs previously, and also this trend line. So, this could be a setup here. If you're very bullish, that's the direction you want to go. And we're also coming down from the MACD down to the zero line. So this is it's a possibility that this is a bullish setup, and we're going to reach all-time highs after this. And this would be a 1-2 and then impulsive way 3 up at this point. Okay, so it's all perspective, but that's why we want to check out probabilities and see where we are. Now, the breadth of the market, I'm not going to show all of that stuff here, but the big tech's the only thing that's been holding this market up. Everything else has been in corrective mode. We saw Palantir, we saw Roku, we saw, oh my gosh, let's go down the list. We saw so many things had huge corrective moves already, except for the larger tech. Hood, D-King, Palantir, Square, well, not HD. They did not. Lemonade, Penn, a lot of these small caps, it just had massive 50, 60% corrections already, and yet we weren't even touched in on the major markets yet. So the important thing is once these big tech companies like Microsoft, for example, once they actually start correcting for real, this is a massive move to the upside. Once this actually gets a 10, 15, 20% correction, you're going to see it reflect in the market because it's going to drag the market down one by one. So you saw this one. This is actually a perfect 1-2 setup here in Microsoft. We had a move down or perhaps a ABC correction down, but either way, nice setup. We pushed off of it. We actually took profit on the reversal and get down below the 20 and the 80 EMA, and we missed that move there, but that's just an example there. So we're watching big tech with eagle eyes, and that's going to move the market the direction that it wants to go. So the last thing I want to go through right now, let's check out BTC. We do have our primary wave 1, 2, and then this next one in the red. I know it's it's kind of light there. It's hard to see, but this we had such a big correction here that this appears to be a wave 1, 2. So we had a 1, 2, 1, 2. And what's happening here is possibly because we did not come all the way down to the 618. We could have came just a little bit lower to test that, but possibly this is a three-way move down for an A, a three-way move up for B, and then we'll have our five-way move down for C, and that would coincide with the market. You know, they do follow each other very, very well. So we do want to watch BTC. Some people actually use this as a risk on, risk off indicator. I like that personally, but I'll use that along with many other things, HYG and things like that. So bonds. Speaking of bonds, I know that I'm actually going to stuff that I wasn't going to speak about. But I want to be pretty thorough on what we're looking at. And, you know, this is a guide for me right here. Bonds have been triangulating into a very tight range here. We thought we were going to break out. This is actually an official trade for my patrons. Started to break out, but broke back down into the triangle. And it's not making lower lows. So we are going to watch this like a hawk with the FOMC. It's going to be very crucial to see how hawkish the FOMC, what they're going to do about inflation and whatnot. And that's going to impact bonds. And what bonds are going to do is going to impact the market if there's large moves. If the bond market doesn't move and kind of keeps triangulating and is very tame, then the market's going to do something. It's going to rely on something else to influence it. But when bonds move, and if they move big, they influence in very direct ways. For example, if the bond market breaks out to the upside, harsh out of this triangle, then it's going to bring interest rates crashing down. Now that's bad for financials, and so that's going to take that IWM and it's going to crash that. It's going to pull down the market in a certain way. It's kind of a catch-22 or a double-bladed sword, double-edged sword, to where if the bond market crashes and interest rates move to the upside very quickly, then that's very, very bad for tech. So then big tech, kind of the scenario that I'm leaning towards. We'll have to see, because I do think tech is going to be the one to drag down the market. So if the interest rates start to really, really move to the upside, then we're going to see that big tech really fall and drag the market down with it. So that's just either way, I think the market's going to correct, but it depends on who's going to drag the market down, who's going to be the ones to be the leaders of pulling down the market. That's how we'll be playing on what we decide to really direct our puts on. And but we already know that the small caps, and maybe not the financials so much, they haven't come down very much, but a lot of the small caps have corrected. But we're looking at financials right here. Huge move up to the upside. And what's happening right now is we have this trend line from the Corona crash. We actually broke down from that trend, back tested, and now it seems we're ready to start falling down. We are holding right on in between the MAs right here. The 100 bounced off of there today, and we have the 200 underneath us, but that's not far down from there. If we make new lows, then it's possible that we start moving back to the downside and possibly retesting this breakout area, which would play perfectly with the IWM. So what's this? Oh, hold on. Weather, support, bringing up all kinds of stuff. I'll just edit that out. No worries. Oh, actually I won't. You just notice each of these different sectors, you just kind of keep an eye on them. You map them out, you chart them out, see what's happening. This one broke down, back testing, so we expect more downside from here. So I don't know if we want to cover anything else today. I think that was about it. We had our bonds, Gold just seems to be going along with the market. It's been consolidating forever. Seems like that's not the one we want to look at. So just triangulating. We'll see which way it picks. It's looking like it wants to go down at this point, but we'll see. Anything could happen tomorrow. And so that's about it. Wait, let's okay. Last thing, promise this time. This is the Vix Futures. So right now it looks like we had a three-way move up and then an impulsive move down. Not sure if that's a three-way move down. We can't really tell what's in there, even on the smaller time frames. But we held this the spot here from the breakout point. And so if we're looking to the upside again, it looks like we might actually break out from that point. We might reach the top of here to major resistance at that point. That's what we're kind of playing out at this point. We had this downtrend line here that we tried to push through, couldn't close there, and broke back down. Let's see if we make this higher low here and see where we go from there. So it's the VIX will be a good tell after the FOMC. All right, guys, so that's it. Thanks for joining us. We have lots and lots of information in this. Sorry it's so long, about 20 minutes here. If you have any comments, let me know what's going on, and we will talk to you soon. Have a good night.